What is up? What is up? What is up, everybody? Yeah, Tuesday. Welcome to the Tuesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Glad you're able to join us today. We're going to do what we do each and every day, taking a look at our 10 to 12 futures markets. We've got about 30 minutes allocated to look at these markets today as we're building a little bit of upward momentum, as we saw a little bit of a rally late in the day yesterday. So we'll talk about what that means. Do me a favor, if you're new to the channel, click the subscribe button, hit the notification bell. If you're not watching this on the live feed, maybe you're watching the archive or the recording, leave a comment down below. Comment of the day. A question of the day is, how do you respond to big market days like we had yesterday, right? Yesterday we had a pretty big market day. Was it a surprising day? I don't necessarily think so. I think a lot of us that were in front of these markets and have been looking at them for a while, we weren't overly shocked and awed with yesterday's move down. And so type it in the chat box. I'd love to hear that, kind of what your response is. My days on a day like yesterday are hopeful that it's setting up my upcoming weeks, right? A day like yesterday sets up your upcoming trading weeks more than your individual days. So, all right, let's go ahead and get started. Let me shrink my head here, and we will get rolling. There we go. So looking at our markets this morning, S&P is down about 2. Now, we did have a confirmation long yesterday out of this demand area, but we did not, I will tell you, this did not fit our rules for an entry of a confirmation long. I know, I'm not sure if John is on here. He sent me a great email about asking about this level here and, where do you place your stop on a trade like this? In reality, for me, this is a non-entry, right? For me, this trade down here is a non-entry, and it's a good area of demand, no question, but what's our 4-hour trend? Right? Oh, there he is. What's up, Mr. John? Yeah, I got your email and I was reading it this morning, and I thought, well, I'll just see if he's on today, and we'll talk about what that looks like. Because your question specifically was around where would I place my stop on this trade with a confirmation entry. In reality, this trade didn't give me an entry because this was a confirmation entry. Go heading back over to the origin of that, where that level was created. If I go all the way back on this long, now, by the way, that's a pretty clean long. It's a very small wick over wick, and the absolute tightest I can place my stop on that level, if I go to a 90-day, 15-minute chart. There we go. So looking at the 90-day chart, the absolute tightest that I can place my stop is I slide from the hourly to the 15-minute, and it would be right here, just below the wick of the leg-in candle at 32.30. So with that being said, even had you taken the trade, you get stopped out. But in reality, because my big picture trend was down, it's going to score a 0 out of 2 of my for following the trend, right? We have a trend following, bias that we want to follow the big picture trend direction, and if it doesn't follow the trend, that's okay. But it has to be a confirmation entry. Well, this actually blew through the distal line before giving us an entry. So now I need to remove that level because obviously we blew through it, but we blew through it with no entry. Does that make sense to everybody? Yeah, it's we're always looking for the wick on the outside. All right. So now what am I looking at in the S&P? Well, now what I'm looking at in the S&P is our 4-hour trend is still decidedly down. We've actually put in a really nice, this candle's got one more hour to go before it prints, but if we finish with a candle that looks like this, that would make a great candle-to-candle setup for a potential short. If we continue down from here. And so what is my overall feeling on what I think the markets can do? Well, my overall feeling, and I talked about this yesterday, I believe, and I believed then, and I still believe, that these markets are going to continue to fall until our big stocks hit areas of demand where we think there's a reasonable rally. And so the first one that I go to is Apple, right? Why is Apple the first one that I go to? Apple's the first one I go to because it's my largest market cap. And I will say that when I look at Apple, I have this area up in here as this wick over wick potential area of supply. And so we could get a little bump this morning and jump up to this, it looks like we're opening up at about 111, but I wouldn't be surprised to see us make it up to this area in here. Let me tighten that up a bit. At about 113, where you could have a potential reversal point there for price to continue to trade lower. And so overall, I think that that's a potential. Joe, what about the 1 hour supply, which was marked yesterday? So let's go. So yes, you're talking about this one up here. I still think that that's a valid area of supply, that 3,300, Joe, up above us. Yeah, I still think that's a valid area of supply. Now, I'll be interested to see, and this is why I looked at Apple before I looked at this supply. I'm wondering if we make it to that supply area in Apple at the same time that price makes it to this supply area here in the ES. Now, remember, this supply area was formed at the London Open, right? At the London Open on early Monday morning here in the US. If I look at the NQ, that same early Monday morning level was this one right here, was this 15-minute level yesterday. So let's look at that. So that 15-minute level from yesterday, that was this area right here, that London Open. We got a little bit of a move away from that trade, giving you a little bit of a profitable move. But in reality, 1, 2, 3, 4, 5, 6 candles later, it had started to make its move, and it was about a 1-to-1 reward to risk, and then it rocketed back up against us. So you may or may not have gotten out of that trade before, and then it came up to this level here, which was formed at the market open on Friday morning. And that was in the overnight. We got a little move away. So we've seen those supply levels work in the other markets. And so that level is still valid, but we came fairly close to it, right? We came fairly close to that level within 10 points. I'm okay leaving it as a limit entry because our downtrend is so strong. So that's what I was going to say. I consider it minor basing, but my stop in this one would be pretty tight, right about here. And so I've got a 1-to-1 reward to risk right here. And this puts me at a 2-to-1. So I'm sitting right at about the 2-to-1 reward to risk. So if we come up here with any strength, then I'm still okay getting into that position. If we base in front of it even more, then I'm not going to be okay getting into that position. Okay? It really comes back to, are we going to get the basing in front of that level? And if we get basing in front of that level, then it's going to make that level no longer valid for me, Joe. So hopefully that makes sense. Okay. Next. So that's my ES. I still think that's a pretty good area. As far as demand goes below me, we don't have anything for a while. And so price could continue to fall. And even on the daily chart, you're looking at around this area down in here, this area of support, 3,200, maybe even 3,100. Somewhere in here might be the little reversal point. I know a while ago we had looked at the 50-period moving average, looking at our 3 moving averages, and that was something that I had thought was a potential where we could see a little bit of a reversal. Price actually bounced off the 50, and that was where we had a couple of days of bullish price action in this bull area. Well, those bull area stocks that we looked at, none of them really held as we broke below that 50 shortly and created a new lower swing low. Remember, on a daily chart, this is the first time that we've had a lower swing low and a lower swing high since February. It really is. If I look at it, this is the first time we've had a lower swing low and a lower swing high since February. Do I think we're going to continue to go all the way back down and test the March lows? Frankly, not really. I think that we have a better opportunity to reverse, but that's why I'm looking at the individual stocks to see where their demand areas. All right, next, let's go over to the NASDAQ. So looking at the NQ on a 60-minute chart, we are seeing a bit of a bottoming pattern here. John, wick over wick, 32.33, 15-minute for the ES. Let me check it out. Let me check it out, brother. 32.33 by 32.36 quarter. This one down here, John. Yeah, that's a clean level. I will tell you, I saw that and I didn't mark it because it's viable, but it's a confirmation level on a 15-minute chart, right? Which is already going to be lower probability. Why is it a confirmation level? Because my big picture trend is down. So I think it's a viable level, but it is it's definitely a confirmation entry if you want to take it, because our big picture trend is still dropping down. I would like to see, do we get any basing somewhere around 3250, 3260 to give us a breakdown potential if we get basing in here and it kind of chops around a little bit today. All right. The NASDAQ on an hourly chart definitely has put in a little bit of strength. There's no doubt that is some strength on the hourly chart. On the 4-hour, my trend has not changed one iota, and definitely still telling me that bearish is the way to go. But on the hourly chart, a little bit more strength has been put in. Now, that little bit of strength that's been put in could have been heavily influenced by the bullish day that we had yesterday in our Apple position. I'm going to look to the origin of this move down. We have a potential breakout above this line. Remember, this was our line to say, okay, well, the bullishness can resume. But we're coming close to this area up here. I think you could still see a reversal off of this trade, off the origin of this very strong move down from Friday morning's open. If I zoom in on that a little bit and go to the 15-minute chart, if you're really conservative, you can tighten that up to just here. And that would be a line of, what do we have there? 11,137 by 11,161. Now, if we come up into here and we get some basing, then that's going to tell me, okay, that thing actually may break out to the upside. And that would be, based on our hourly chart, I wouldn't be too shocked to see that occur, but that's still not going to be enough to change my big picture 4-hour trend direction, right? I would need to get a higher swing high and a higher swing low to change my 4-hour trend direction. I'm still looking on the 4-hour for a potential candle-to-candle short, though, off of this level here. So I'm saying that I'm still more bearish than I am bullish. Make no bones about it. Still more bearish than I am bullish, but understanding that if we do get basing in this supply area, we could get a little breakout to run up here for a short-term day trade. Make sense to everybody? Give me some sort of clarification to make sure that everybody understands that concept and feels good about it. I got the little delay in YouTube Live makes it a little bit harder to communicate with everybody. Beautiful. Okay, good. All right, let's talk Russell. So let's talk about the rut. Yesterday, we talked about this bearish pennant pattern that we had forming, and we said, if you're inclined, I'm okay with you I'm not normally a big fan of taking the pattern breakdown, but I said I'm okay with you taking the pattern breakdown in this scenario because of our strong overall trend direction. Did anybody grab this short and take the breakdown off of this Russell trade yesterday? Because if you did, it fed you about 30 points worth of movement by the time the middle of the day happened. Now, it did come to our 15-minute area of demand, and at our 15-minute area of demand, we had a touch and a move away, a touch and a move away. Were any of these entries? I stared at it and watched it go. That's always the worst, Murray. You got to, at that point, man, you just gotta walk away. Did these entries here, were any of these good for our entry? Right? These touch and goes. No. All this became was basing in front of a level. And that told me that this level lost much of its validity and much of its steam. And even if you did try to take it, it violated the distal line before getting in. Now, hindsight being 2020, it did wind up holding and working out for a little bit of a move, but I'll say a little bit of a move is probably the way to think about it, because I don't know that it was worth sitting there waiting for that trade to occur. Now, what do I look at based on what we have today? So based on what I see from the overnight, whoops, that's not what I wanted, wrong drawing. I'm looking for the potential here of price continuing to break down from here. 1472. Now, I don't know that we're going to see the markets get a humongous rally, but I wouldn't be surprised to get a little bit of a snapback rally, a little bit of a short covering rally today, and then for us to continue to fall in some of our overall markets. Our 4-hour trend on this one still continues to be down, and that 1472 potential breakout line, I think, actually sets you up for price to continue to run down to this 1460 area, maybe even 1453 as your next potential target. Okay, so those are our equity markets for today. Those are the ones that I typically cover. Let me share this grid. Give me 1 second here. I got to throw all my trades in the grid. Oh, good. Today's the 22nd. All right, and the trade update worksheet. Joe says there's a 1-hour supply similar to the ES. Yeah, Joe, you talking this one up here? That one right there, Joe? So that one up there, I'm not as big of a fan of because of this upper wick. The ES 1-hour supply was formed. Oh, I'm sorry, 1 hour. My fault. It's still the same area, right? I don't like it as much. I still like this one formed way up here, but look at this. The 1-hour supply similar to the ES, if we look at when it was formed, I tend to look at when levels were formed. This level was formed at the London Open on early Monday evening. We still have that zone marked. The NASDAQ has already come through that level that was formed on the London Open at 1 in the evening, or 1 in the morning, excuse me. So the NASDAQ's already come through that supply, and the S&P is coming close to that supply. So what does that tell you, just looking at how far we are from that level? What does that tell you about the Russell relative to the other three markets? Right? If we think about that circle being the London Open in all of those markets, right? That same level was formed. The Russell is, it's struggling. It's significantly weaker than the other two that we normally analyze based upon the NASDAQ would be stronger based upon that one area of supply, using that one area of supply as our reference point. Right? Okay, so let's move on to so overall, for those of you guys, because I know there's a couple of you that said you were tuning in, they're not regular day traders or short-term traders, and you were wondering, what do I think the market's going to do? When I start to hear everybody saying that this ride is over and that the market, the bull is done, and that we're about to roll over, which I saw come by a couple of times yesterday. I even saw the mighty Jim Cramer say something along those lines. And now I will, to be fair, I don't normally listen to what Jim Cramer says. I'm not knocking the guy. I just, it's just when the mass media starts saying, "Here we go, bear market, everybody get ready, hold on to your shorts." That's typically when we start to see some decent support come into the market and some demand come into the market. Now, usually it goes down for a few more days, which would fit into the narrative that we're still waiting for some of these stocks. So, I'm kind of the same way. I'm looking for the narrative for some of the stocks to find areas of demand for an opportunities to get long. And I will say that for the first time in a while, the S&P is giving us lower swing lows and lower swing highs on a daily chart. And so you can certainly take that as your cue to say, okay, I'm not interested. But if I'm looking as a position trader or a longer term investor, we've had a couple of weeks down. It's been a rough September, no doubt. It's been a rough September, and we've got an area of demand here on a weekly chart where we could see a reversal. So for those of you that are, more of a longer term mentality, and you're not just trying to catch a day trade every day, that's a decent little opportunity to say, okay, I think at some point you've got to be it's got to be worth it enough for you to get long if you believe that that the market is going to continue its move higher. That's really what it comes down to. Now, we are going to start talking about the election plays as the market comes closer to the U.S. presidential elections, but I don't think we're quite there yet. Yesterday's rally made no sense. Breadth 2,200, VIX over 26. We get a huge rally. Well, I think, Murray, what we saw yesterday was a little bit of a short covering rally there at the end of the day. Short covering, profit taking, whatever you want to call it. Right? I mean, that to me is also part of it. Is where's the short covering and the profit taking come into play in all this? And so when I'm looking at high quality setups, I'm going to stick to the bigger picture times that I can find quality areas where I certainly am still going to have stops in place, the better I'm going to be. So I'm still going to trade on the micro level, meaning 15-minute and 1-hour charts, and I'm going to trade short on those until my bigger picture stuff says, hey, listen, it's time for you to really look for opportunities to get long. And I'm just not a believer that the market's going to come tanking down off of this right now. Now, is it possible that could happen at some point? Absolutely, it's possible that can happen at some point. But I'm gonna, until the market tells me otherwise, my bigger picture stuff is gonna be bullish. My shorter term stuff is gonna be bearish, and I'm gonna follow what the market tells me to do and not guess. All right, off my soapbox, moving to commodities. So let's start with crude oil. So crude oil yesterday, we had this area right here, this 15-minute level, but what happened there right in front of this 15-minute level? Now remember what we look for when we look for these levels. We look for, what's my profit margin? Well, in this case, if my stop was just below the pivot right here, that's my risk. Duplicate that trade or duplicate that line. I've got right there a 1-to-1 reward to risk. And right here, I have a 2-to-1 reward to risk. Were we basing in front of the level? Were we basing in front of the level prior to the 2-to-1? Did the 2-to-1 exist really for a profit margin on this trade? Not really, right? It was a really tough one on this setup. You had a little bit of a move here. It was one of those ones where it was it existed, but boy, just barely, right? And so we did wind up coming through that level, breaking our kind of sideways. We'd had that strong rally up on our 4-hour, and then we kind of went sideways here up at the top and started the weakness, and now it's kind of rolling back down. So that told me, okay, a small 15-minute area of demand that gets broken. Now I can start to say, where's going to be my next levels? Well, this area down here, this 38.55, I'm going to have to make that a confirmation entry. The reason I'm going to make that a confirmation entry is when looking at it, first of all, it's not a great time of day. The level itself is not a great time of day. And I'm okay using that as a limit entry in the context of a big move up. I'm okay using it as a limit entry in the context of a big move up, but I'm not okay using it as a limit entry as we're seeing strong momentum back down on the 4-hour time period. So I move that to a confirmation entry. The other thing that we can look to do is say, all right, well, if we are going to continue to fall, where might a good short entry be? When I go to the 15-minute chart, if we get a little rally up into this region here today, that might be okay for a short. I've got a little bit of recency bias against it because this could just be kind of a retest of this wick over wick right here. And so if that's the case, let's make that a confirmation as well because it's a bit of a retest of the area to the left. Next would be gold. So gold yesterday came back down to this area that we had identified freaking weeks ago, heck, months ago, and got a very strong move. Now, what is that level? That level is a pivot from back here, and we had identified that level literally back in August. It was that very strong, sharp rally up. So we hit that zone on the hourly chart yesterday, and we got a pretty decent move away from that level. Now, I didn't get really even a 2-to-1 reward to risk out of that zone yet. Right? Because remember, this is the pivot right here. This is the pivot, so our stop can go just below that pivot. So if we look at what we've been afforded out of that so far that trade gave me a 1-to-1 reward to risk. It did not give me a 2-to-1 reward to risk, and a 2-to-1 reward to risk would have me. Oh, it's not grabbing it. There we go. 2-to-1 reward to risk would have me up here. Well, what do I have up here? Well, look at that. I've got a really clean area of supply that was created up here at our 2-to-1 reward to risk. So if you're still in this gold trade from a long perspective, since we've not been able to really get to that 2-to-1 reward to risk, I would say move your stop to break even if you're still in the position. Maybe even take a little bit off the table if you took multiple contracts. Take some profit. I mean, it doesn't look like it's going to make it to our 2-to-1 level. And so if you did take this trade, take some profit. You've made yourself, what is that, about 18 points, which is not bad. I would take a little bit of money off the table. But if we do continue to rally up, at least move your stop to break even so that you don't take any loss. It's a free trade stop. If we do rally up and you wind up hitting the 2-to-1, I think that becomes a pretty good area of supply up in there. All right. Yeah, let's take a look at copper. So in copper yesterday, I had a level that I felt pretty good about in a 15-minute chart. And we had this little bit of a wick over wick unbalanced zone right here. The market just sliced, I mean, absolutely right through that level. Just beat it all to hell. There's no nicer way to put it. Sorry about that. I'll try to be nicer. It just beat that market up. And our 4-hour trend, what do we see with our 4-hour trend? Just looking at our 4-hour trend, what do you see? Right? Do I need an indicator? Now, I'll put an indicator on here. Matter of fact, I'm going to throw RSI on here. RSI tells me, okay, I'm in the middle. I've got a swing high here. My swing highs are kind of slowing down, even though I had higher swing highs in price. I have roughly the same swing highs with my RSI. I'm kind of in the midst of the move. So if I throw MACD on there, which is the one that I normally use, MACD, same thing, right? Roughly the same swing highs, even though I got higher swing highs in price. So what do I anticipate the next swing high to look like? Well, it's gonna be lower, right? And a lower swing high would mean that slowing momentum and price would then roll over. So I think for those of you that are still using copper, as we approach areas of supply, you're a little premature because technically our big picture uptrend is not over. You're a little premature, but I'm okay with you getting short up here at the origin of yesterday's really strong move down if you wanted to look up there as a potential short. Now on a 15-minute chart, trim that down. You could theoretically trim your level down to here, but in reality, you want your stop above that pivot anyway. Okay? Nat gas, this is the level we talked about yesterday. For those of you that were able to stay in the gap and go, if you didn't get stopped out, it gapped and went and continued its move down. Hit our demand level, which is a confirmation demand. Why is that a confirmation demand? Well, it's a confirmation demand because we are in a downward trend, and it broke just below and popped out, gave you a nice maybe 4-to-1 move out of that level. I'm going to remove that one because I think prices are going to keep going down. We look like we're going to continue to fall. And all of these demand levels below me now are confirmation areas of demand. Any rally up to a supply zone is an opportunity to get short. I think this is a really clean one up here. That's that 1965, 1984. I think that becomes a really nice area where you can anticipate a reversal and price coming back down from here. All right, I'm running out of time here, so let me share this grid. All right. NGX very different than the shape of NGV. Let's put them both up. Let's put them up side by side, Liz. Oh my, very different. Yeah, very vastly different shapes on those. I'm actually very surprised. That's really interesting. So now I will tell you, I don't normally dive too deep into future spreads. Actually, I never dive into future spreads. But that is a really strong spread trading position. I might ask Brandon today, because I know Brandon Wendell is a big future spread guy. Those of you guys that know Brandon Wendell, he knows his stuff on future spreads. I can ask him about it. The other person I might ask is John Rowland. By the way, John Rowland's going to speak at our next Trader Summit, so be ready for that. We were going to do October 1st, but it looks like it's going to be October 15th. We have a few more guests that we finally just nailed down. So, yeah, I don't either, Liz, but this is where future spreads exist, right? I mean, this is why they have them. So, interesting. All right, let's go check bonds and currencies right quick. I don't have a whole lot of time left. I'm running a bit. I told you guys 30 minutes, and I'm running late. All right. The bond market. What am I doing with the bond market? Same thing I've done with the bond market for the last few weeks. Next. Aussie. So the next is the Australian dollar. Oh, Liz. Come on. That's as bad as my corny futures jokes. Get it? Corn futures. Okay. In the Aussie, so we had a breakout trade right here. We got 1 touch, 2 touch. Technically, this was 3 touches. Your basing here before the level was very suspect. Now, if you looked at, say, the 15-minute chart and you wanted to take the breakout and justify your basing on the 15-minute chart, that's okay. Your stop would have been right above here, and you got a really nice move away. I got to tell you, I didn't. I'd love to tell you that I did, and I rode this thing down like a cowboy, yeehaw, into the sunset. I didn't, because that just didn't fit my basing rules. And looking back at the retest of this area, that would be up here for the next time price comes back into here. I hope some of you did, but it didn't fit my rules because I had looked at it originally on an hourly chart, which means I needed basing on an hourly chart. Now, the next level down below, the 15-minute area here, that's a confirmation entry. Because we are with our 4-hour trend, breaking below lower swing low, lower swing high, technically that's a downtrend. Even if you took the long, you didn't really get anything below here. 1, 2, 3, 4, 5, 6 candles later, you're still in it. It stayed in it for like 15 or 20 candles. And now it looks to be coming down even more, right? So now it looks like we've got more momentum to continue to fall. On the 4-hour chart, we definitely now have, 4-hour chart, we now have a bit of a downtrend. We got below this low here, and so that tells me that there's room for price to fall. On a 1-hour, what about the wick over wick? Are you talking this one up here, Olsey? The one up there formed at the London Open? That level, I think, is pretty good, but it's already been tested once, and we traded more than halfway into that zone, right? This wick here traded more than halfway into that zone, which makes that zone defunct for me. Oh, the bigger one. So this one right here. Yeah, that one's okay as well. If you wanted to look at this one, my problem with it is that wick over wick is kind of a retest of the one above it. And so, and I call that incestuous levels, right? They kind of just eat away at each other's zones. And that's a little bit of my problem with this one here, in that it's not a perfectly clean level. So that's my problem with that. It's kind of an incestuous zone that's eating away at itself. And that's why I don't use those levels quite as often. Now, when I see that price can continue to come down from here, I think that we could see price falling from this region. There's even a little 15-minute potential reversal right in here at about 72.24, 72.20, 723, somewhere in there. We could see a reversal for price to come back down. Bit of a retest of this area here. So you might want to take it as a confirmation, but look for a reversal somewhere in there. The euro level, as the euro, we were in a sideways price action, and the euro now broke below our range. We just broke below our 4-hour range. And so in that, our 1-hour chart, we hit it, moved away, gave us a bit of hope, and then did not, and then came all the way down below the pivot, and now is squarely in a bearish camp. Right? We're squarely in the bearish camp now for a little bit, as we saw all of these currencies come down yesterday. So all those demand levels down below us, they come right through, because we saw what? We saw strength in the dollar. When you see strength in the dollar, you're going to see these currency markets, fall a little bit. And once again, short covering rally, quite possibly, but breaking us out of this sideways trend action. I'm not going to add anything else to today's levels because I don't see a whole lot that's making me, I got to take that, jump at it kind of trade. And the closest I've got here would be this 15-minute area up there. Yeah, they've all got the level at the same point, and that's the fun of when you're trading these currencies that are going against the dollar. Canadian dollar, same thing. We got a little bit of basing here in front, but we didn't get the quality basing enough to take an entry. However, that could now become a reversal point here on a retest. We came through the confirmation without an entry, came to the next one. Now, this one, if you took the long on a confirmation, you actually have gotten about a 2-to-1 out of that trade so far. At this point, we have to remove it. We can't take it again. Let's look to see if we get basing somewhere down in here for price to continue to break down. When I look at this on a bigger time period, we go to the 4-hour. This one's in a pretty clear downtrend. It broke out of the sideways with some strength, pretty clear downtrend. I think your next move down theoretically could take you down to 74.632. Great British Pound. We talked about the same thing here on the pound. We had 1 touch, 2 touch. I thought we were going to get basing here this time around. This is not going to give us the quality basing, hence the bounce out of there. But I still think that overall prices have a better chance of coming down. I would just need to wait for a quality reversal point. Once again, this one does exist in here at the 15-minute level if we make it to that one here in the next few moments. Okay, and then our last market here was the Japanese yen, which blew right through. I mean, it was just a tough move on the yen, as once again all of our currency markets fell into the same areas. And then our 4-hour, we're losing a bit of steam here after this tweezer top. Tweezer tops on these bigger picture markets are pretty good. This is actually reversing down for a potential candle-to-candle short below that level in here. So, all in all, yesterday, lots of big moves that we had in our currency and equity markets that were mostly to the bearish side, recovering a little bit today. But what I see is I think that there's a better chance that we continue to trade lower. The markets are telling me that we're going to trade a bit lower on the smaller time frames, the 1 hour, the 15-minute, even the 4-hour chart. When we start to look at the weekly and the bigger picture stuff, now I can start to identify some of those larger time frame trades, and that is going to give you the better opportunities. So look for that later today as your potential setups. Jose, let's take a look at that. The New Zealand dollar. Same thing with this one. It did the exact same thing that the other markets did. It went right through that area of demand on that strong move down. I haven't looked at this one in a couple of days, but I would look to here as a potential breakdown if we get basing, because I've got 1 touch, 2 touch, 3 touch, a little bit of basing. That would be ideal for an entry. Short, immediately my eyes go to this wick over wick area right here, which was also an area of congestion back here, and then some supply back here in the past. So that's at 67.24 by 67.37. on the 4-hour, that's clearly a topping pattern, right? That's a strong topping pattern on a 4-hour chart. So let's see if we get some pullback from there. Daily is definitely also losing momentum on its upward move. So as far as longer term trades, this one actually I could see this coming all the way back down into this region here over the next few days for maybe more of a swing or a position trade even. All right. That's all I have for today, everybody. If you guys have any questions, as always, shoot me an email. Chuck.Fulkerson@tradersarmy.com, typing it into the chat box so that you have my email address. And hope you guys have a great day. I'll talk to y'all soon. See ya.